And so once that clicked in my head, I was like, holy shit, this is really important. There was some point their Bitcoin was worth $50 million. Then they were worth $500 million. No, I'm not going to sell it. They're worth $1 billion, not going to sell it. We are just simply going to default and repudiate the debt.
Welcome to Honest Money. I'm your host, Anja, and today's episode is brought to you by Hardblock. Joining me today on Honest Money Show is Vijay Boyapati. Vijay wrote the really famous article called The Bullish Case for Bitcoin, which many of you would have heard of. And yeah, welcome to Honest Money, Vijay.
Thanks for having me, Anja. It's great to meet you.
As I was preparing for this interview, I listened to your podcast on Robert Breedlove, and I had no idea that you first heard about Bitcoin back in 2011 until you did something about it in 2012. So you're like a really early adopter. And I'm just really curious to know the backstory of what leads someone to learn about Bitcoin so early.
Well, it was just luck. I think it was the way I came across Bitcoin was that I had a bet with a friend, and the bet was about Federal Reserve policy, where they're going to increase interest rates or not. It was a fairly small bet, and we bet one silver coin, 1 ounce silver coin, because we were both kind of gold bugs and silver bugs, and we were interested in honest money. And so we bet a silver coin. I won the bet, and my friend said, well, I could give you the silver coin, but there's this new form of money that's really cool, and it's online, and it's called Bitcoin, and I want to pay the bet in Bitcoin, not in silver. And I said, okay, show me what this thing is. And my friend explained that I needed to download some software, so I downloaded the core software on my laptop, which was a really cheap, $200 Asus laptop, piece of crap. And it started downloading the blockchain and verifying transactions, and it got really hot. I thought the laptop was going to melt. And I'm like, what the hell is going on here? And he was like, oh, don't worry about it. Just let it finish. And it finished downloading the blockchain. And then he helped me create an address, and he sent me 5 Bitcoins. I think the price was about $10 at the time, and the price of the silver coin was about $50. So he was giving me the equivalent amount of value with 5 Bitcoins. And then he showed me on a block explorer and said, look, I sent you 5 Bitcoins. And I mean, it didn't mean anything to me. Like, it was just a bunch of string of, numbers and letters, like an address. I didn't know what that meant. And it had a 5 next to it. And I was like, okay, whatever. I don't know what this means. And I just forgot about it. I kind of thought this is kind of some weird thing and totally ignored it. And the funny end to that story is that that laptop I gave to an ex-girlfriend when we broke up, and as Bitcoin started going up later, a few years later in price, I remembered that laptop, and I remembered that I had my first 5 Bitcoins, and I started thinking about it. That laptop's worth like $10,000 now. It's worth like $50,000, it's worth $100,000. And so I emailed her and I said, do you still have that laptop? I have a few files I want to get back. And she told me that it had been lost. And she was telling the truth, because those 5 Bitcoins, you can still see them on the blockchain. They're in the same spot. They've never moved. So the private key's dead. But anyway, that's how I came across Bitcoin in 2011. And at some point, I sort of started thinking about, like, what is this thing that my friend was telling me about? And I started, like, exploring it. Mostly, I mean, not as from an investor perspective. I didn't, like, realize, hey, this is the next big thing. I need to put a lot of money in it. I didn't think about that at all. I was just like, this is kind of cool. What is this thing? How does it have value? And I had a background in Austrian economics. I'd studied Austrian economics, and I was really interested in that question, not in the context of Bitcoin, but in the context of gold. And I had spent years thinking about, like, why does gold have any value? I have Indian heritage, and, like, Indians seem to love gold and
Yeah.
want to hold it, want to own it, and but why? And I'd also come across this other perspective and argument from some famous investors like Warren Buffett, who said if there were aliens and they came down to Earth and they looked at what we did with gold, they think we're insane. We dig up this worthless rock from one point in the ground and then we go and bury it in another point in the ground. Like, what are we doing? Why are we moving like this useless rock from one place to another? And so there's also this perspective that some people have is very skeptical of gold, like it's useless. Why do you want gold? And so with my background in Austrian economics, I was really interested in monetary theory, like why does money have value? And so that thought had been kicking around in my head for years. And when I used to work at Google, I was an engineer at Google, and I had many debates with a lot of smart people on economics. Google happens to have all these email lists for people who have different interests, whether it's video games or economics or whatever you're interested in. There's a group of people. There was a group of people who would want to talk about it, and economics was one of my interests. And so there's lots of debates about why does gold have value, and is hard money a better system than what we have now with fiat money? These debates happened well before Bitcoin. A lot of people had these debates like for decades before Bitcoin. So I was super interested in that. And then I pretty quickly realized that Bitcoin is like digital gold. It has all the properties that make gold special, but it has this extra property that makes it even better than gold in that you can teleport value. Like if Anya, if I wanted to send you a gold coin, I would have to send it in the post. It would take, who knows, a week or 2 weeks to get to you. There's some risk in sending it. Someone might steal it along the way. I have to pay the cost of postage and insurance and all this stuff. It's a pain in the butt, right? But
Yeah.
I can send you Bitcoin as easily as I can send you an email. And that is a very, very powerful ability to be able to send you value without anyone between us, a bank or a government, without anyone's permission. That's never been possible in human history. And so once that clicked in my head, I was like, holy shit, this is really important. And so I just became obsessed with like Bitcoin, and the same questions about why gold had value started, bouncing around my head with Bitcoin. And it's even more curious because gold, at least people have this story of like it's physical and it looks beautiful and you can use it for jewelry. And some of the questions of like why gold has value, people resort to that. You can put it on your
Intrinsic value.
exactly intrinsic value, which is really a completely nonsense idea. If you really dig into intrinsic value, real it's a nonsense idea. All value is subjective. That's a foundational idea in Austrian economics. Uh, Bitcoin doesn't even have that physicality. You can't wear it. So it's even more curious. Like, why does this thing that was created by some anonymous guy on the internet that came out of nowhere, why does that have any value? And so that's been a question that I've been obsessed with for goodness 15 years now. Yeah, that's eventually led to an article which I wrote, and I can get into that, and then the book that was based on the article.
Quick one for the Aussies listening. Hardblock is offering a $10 sign up discount right now. And if you're with another exchange, ask yourself this: are they Australia's longest running Bitcoin only exchange? Because if not, maybe it's time to switch. Head to hardblock.com.au/join/honest money and start stacking sats today. Yeah, I love that. I'm just so curious because, I mean, Austrian economics is such a niche thing. So, how did you even get to study that in Australia? Like, I had a bit of a research, and there's, I think, two professors at RMIT that teach Austrian economics and are Austrian leaning, but it's not the mainstream. It's definitely. So, how did you even get into that? And I'm
Yeah,
jealous.
actually, and to put it in context, someone once said, which I think is really true, for every Austrian economist, there's 10 Chicago School economists, and for every Chicago School economist, there's 10 Keynesian economists. So the vast bulk of economists have got this kind of mainstream establishment view of economics, that like the government should be controlling the economy to some large extent and should be controlling the money supply. This is the Keynesian school of economics. Then there's a slightly more free market school of economics, which is the Chicago school, and there's far fewer of them, and there's far, far fewer Austrian economists. They're basically impossible to find in academia. Um, so I came across Austrian economics when I was at Google, and I came across a group of people who were libertarians. And I didn't have any political views. I didn't know anything about politics, and it's kind of came out of university naively as a blank slate. And I came to Google and I met some of these libertarian people, and I got curious. And one of them lent me a VHS tape of uh,
I love that.
Ayn Rand
Yeah.
being interviewed by Phil Donahue. I don't know if you remember Phil Donahue, who's one of the big talk show hosts in the 1980s with Oprah. Oprah and Phil Donahue were the big ones. And he gave me a VHS tape of Ayn Rand being interviewed by Donahue. And honestly, it was like being hit by a bolt of lightning. I'd never had a feeling like that. Like, oh my God, there's an explanation for how so much of the world works that really makes sense and is logical and uh, can explain the dynamic of how governments work and why people behave in the way they do, and economic incentives and all this stuff. Uh, and then I went down a huge rabbit hole for several years learning about libertarianism. And then I came across Austrian economics, which is kind of school of economics, which is philosophically aligned or tied with free markets, and thinks a lot about incentives and things like that. Once I came across Austrian economics, I went down that rabbit hole as well. I learned about Ludwig von Mises. I read Human Action. I learned about Murray Rothbard. I read everything that he wrote. I just was voraciously absorbing all this stuff and gave myself a course effectively in Austrian economics. I didn't go to school to do it. I'm a computer scientist by training, and yeah, that's kind of how I came across Austrian economics and learnt about it. And eventually, I even gave a lecture at the local university, University of Washington, on the application of Austrian economics to healthcare policy, which is kind of not related to Bitcoin or gold. Um, but yeah, that's how I came across it. It was just while I was working at Google and found a cohort of people who had these crazy ideas, and then infected me with these crazy ideas, and led to many years of self-learning and teaching myself about this field, which I think is one of the great tools to understand how the world works.
Mm. It's fascinating, and I've certainly built up a love for it. I haven't read Human Action yet, but I have read a number of books in economics, or Austrian economics, I should say. I'm just kind of bracing myself for Human Action. Like, it's a big book, but
It's
looking
very
back,
dense. It's
yeah,
very,
yeah,
very
I did
dense.
hear
Yeah.
that. I did hear that. I'm trying to, yeah,
It's like
warm up
climbing
my
a
brain.
mountain. If you do eventually read it, you'll feel this sense of accomplishment that you would if you got to the top of a mountain, because of its density, but also its scope. The scope of um, what it covers. It goes from like epistemology and philosophy. Like, how do we know anything? It doesn't even start with economics. It starts with like, how do we know things, and then it builds a framework foundation, and then builds economics on top of that, and it covers like all of these different aspects of economics which help understand how our world works. So yeah, it's one of the most important books I've read, and it's always cool to meet people who have read it because it's quite a rare thing.
Yeah, yeah, it is. Like, I'm pretty much friends with a lot of Austrian economists on LinkedIn, that you just find these people all over the world when you find a niche interest, and it's such a, yeah, it's such a wonderful thing. Um, but I'm very curious to know, like, what is money actually solving for in the deepest sense?
That's a great question. I should firstly apologize. There's like some like uh, garden work happening outside my house. If you're getting any noise, then I apologize for that. But what is money? That is such a deep question, and what problem does it solve? Um, I think one way to answer that is, what would human society look like without money? Um, we would live in the most primitive state of barter, where it would be impossible to have a division of labor, where we would live in very small villages, and all trade would be limited to the very small group of people around us who we trusted. Um, Money really allows for civilization because uh, it allows trade between people who don't necessarily trust each other, and it allows the solution to this problem in trade, which is the double coincidence of wants problem, which is if I am a fisherman and you grow fruit, and I want fruit, you might not want fish at the time that I'm selling it. I want the fruit that you're growing, but you don't want my fish. But maybe there's someone else who wants fish, and I can sell to them, and then I have something that you do actually want. Like I sell some fish to the baker, and the baker gives me bread, and you want to trade that fruit for the bread that I have. And what happens over time is that societies kind of find this common medium of savings and exchange that everybody can kind of standardize on, so that you don't have the double coincidence of wants problem. So it allows trade to become much more free flowing and with much less friction. And then I say, hey, Anya, I want some of those fruit. And we don't have the problem where you're like, I don't want fish, but I'll take those gold coins because I know I can use those gold coins to go and buy stuff that I do want. Uh, so money provides the foundation for all trade and all savings. And then it allows for specialization. It allows for societies to have people who become the fishermen and become the bakers. And you don't have these very primitive barter societies where everyone has to basically do everything. Like the most primitive societies, people have to have skills in effectively everything. They don't have the ability to specialize, because trade is so limited in scope to the people that are in that small society. And it also allows much bigger geographical scope for trade, because then you can trade with people you don't know or trust, because what you're getting back from them is um, something that you can exchange with a lot of people. You're getting gold, for instance. Like I will sell my products to someone far away that I don't know for gold, because I can use that gold locally. I don't have to trust the quality of the thing that they want to give me in exchange. And it has these other advantages as well. Like money has the advantage that you can take your savings through time and space, right? You have something that you know will be valuable tomorrow as well. Whereas if you have just your the things that you have grown or you've built, they can perish over time. Like if you have fish, and that's the means of savings, then you can't really keep the fish for very long. Eventually, they will rot, and then you don't have any savings anymore. Whereas if you have money, you have something where it's going to keep its value over time. So it solves all of these kind of um, uh, problems between coordination problems in society. How do you coordinate, have a lot of people in a society coordinate in a way where they don't know or trust each other, but they can coordinate at distance, and without trust? Money solves that problem. Uh, and so humans pretty early on developed money because it really helped the development of civilization. And so then you get the question of, like, what is good money? Why can't money be fish or cows? Or, there have been a lot of things historically that have been money. What ended up winning? And that's a really interesting question too. And that's also been understood for a very long time. One of the things I've pointed out is that Aristotle, over 2,000 years ago, wrote a treatise on what made for good money. We knew the properties of good money, and humans like didn't. Aristotle kind of codified this in a document, but when money emerged, it wasn't because someone sat down and thought about the properties. It kind of emerged organically. It evolved um, by people trading with each other and slowly but surely figuring out that certain things are good to keep your savings in and are good as a medium of exchange.
Yeah, and like, so I'm curious, if with subjective value theory, if everything is subjective, how do we all end up agreeing what money is worth?
That's another great question. the way it works is you decide personally that you value something uh, more than some other thing, and just organically it emerges that we we converge on one particular thing because it benefits all of us to converge on one particular thing. It's like a Nash equilibrium. That's the thing that we each of us slowly decide is the thing that we want to hold as money because we see that everyone else values it. So it's this one of these kind of invisible hand things where each of us are coordinating because we're realizing other people are valuing something, and because they're valuing it, we value it more, and slowly but surely it emerges as the dominant thing, uh, and that eventually sets a price level because people will uh, on the market, they'll say how much gold I am willing to give up for your bread or your fish or your fruit. And through thousands or millions of trades, prices begin to emerge. Uh, and that's how over, many hundreds and thousands of years we got a price level. Like gold was eventually money, and in the 19th century, you could go to a merchant and you could buy things with gold. And those price levels can all be traced back through history by people trading and establishing price levels. And that happens now as well with money, even if it's not gold, if it's fiat money. Prices emerge just through constant trade of supply and demand, of people setting prices and saying, I'm going to sell my bread for this amount. Oh, not enough people are buying it. I have to lower the price, and that's how the price level of money emerges, just organically and through the free market.
Like I was doing some research in preparing for this interview, and I was looking at the history of gold a little bit, just using AI. So I don't know the accuracy, but it was interesting that it really took like hundreds and thousands of years to evolve, well, not hundreds of thousands, but thousands of years to
Mhm.
evolve into
Yeah.
money. And when it first came out, it was just something that was used by elites. So it wasn't even adopted widely as a medium of exchange. And one thing that helped it move along as a medium of exchange was the government stepping in and standardizing it. So when that kind of removed somewhat of the trust between people who traded between each other, that actually helped with adoption. With Bitcoin, we don't have that issue because you don't need to trust anyone else. It's entire like it's verifiable and it's final settlement. It's immutable. So what you exchange, it's there forever. And it's interesting because one of the things that I think about all the time is, will Bitcoin become a medium of exchange? Like, where do you think we are? Because I know you wrote in the article about the 4 different phases of monetization. So, where do you think we are? And do you think Bitcoin will go all the way?
Yeah, so I should talk about what those four different phases are. One of the big misconceptions that people have about money, and actually a lot of economists make this uh, error, is that they define money as a medium of exchange, as if money emerges de novo out of nowhere and is suddenly a medium of exchange. That's, like you said, that's not what happened with gold. Gold didn't get dug up by the first humans and they started going to the grocery store with it and buying stuff. I mean, that's just not how money evolves. The way it evolves is it always starts out as a kind of curiosity, a collectible. It's something that humans see and think, oh, this is cool. I want some of this, not because it has any value. And this is true of all the early monies like seashells and beads and gold. They didn't have any use. You weren't able to feed yourself with them. You weren't able to do anything productive with them, but they were cool. For some reason, humans have this desire to collect things which are rare. And, there's very interesting anthropological theory that this is one of the reasons why Homo sapiens ended up being the species which dominated the earth instead of Neanderthals and some of our kind of near competitors like Denisovans, is that we had this desire to collect things which are rare, and because of that desire, we were able to evolve this social coordination through money that none of these other competitors to us had. They were not able to coordinate large groups in the way that we were because we just happen to like things which are kind of cool and shiny, right? Um, so yeah, that first stage of money evolving is the collectible. It's just something you see and things cool. And then the next stage it evolves into is the kind of store of value stage, where because you see that other people value it, that they want to hold it, for whatever reason, it's just cool. You recognize other people want to hold it. You start desiring holding some of your savings in that thing because you know other people also desire it. And you can hold something that's valuable knowing that other people might want it and may be willing to trade for it.
Need a way to sign, verify, and secure your Bitcoin? Australia's one-stop shop for Bitcoiners has you covered. From signing devices, nodes, and backup solutions to bitaxes, decor, and apparel. Visit shopbitcoin.com.au.
And eventually, when it becomes widely recognized as something that is valuable, it becomes what you would call a store of value. It's something that you can hold value in over time. You know that if you hold a gold coin or a chunk of gold and you give it to your children, that your children will have something valuable in their life. That's kind of something you'd recognize as a store of value. And then when widely recognized as a store of value, you get the next stage in the evolution of money, which is now I can trade with this thing because I know that everyone else values it. And so I can hold it and then I can go say to another country or trade with someone and say, "Hey, you have a cow. I have a gold coin. I know that you value gold. Can I trade you my gold coin for the cow?" And then you start getting the medium of exchange where instead of um, doing direct barter trade where you have a cow and I have some fish and that trade won't happen because you don't want fish, we do this uh, intermediate trade. We have a medium of exchange. And so then you have the evolution from the store of value stage to the medium of exchange stage where people are starting to do commerce in this thing, in this economic good. Then the final stage of the evolution of money is so many people are trading in this thing and it's starting to look like money that people start pricing in terms of it. They start giving prices in terms of the money. They say, "Hey, this cow is 2 gold coins." That's a price. All right, and that's what we kind of understand money to be today. We go to a grocery store and we see prices in terms of dollars, Australian dollars for you, US dollars for me. And that's the last stage is called the unit of account. You can think in terms of the price level of that monetary good. And not only you can think in terms of the price level, you can calculate profits and losses and run businesses in terms of that. Like you have a bunch of costs when you're running a business and you know how much you have to sell for, and the profit is the difference that you measure in that unit of account. That's the final stage of the evolution of money. So Bitcoin really is at the earliest stages of this. Um, when it was created in 2000, when the network was launched in 2009, and you can start transmitting Bitcoins, you were in the kind of collectible stage that it didn't even have a price level. And the only people who were interested in holding Bitcoin were these kind of very nerdy cypherpunk type people who thought it was cool, right? Just like the first humans thought that a shiny rock was cool and they wanted to own some. You had some nerds who for them it was the equivalent of a shiny rock. They're like, look at this cool token thing that I can send across the internet and no one can stop me. It's so awesome. But then eventually a price level was established, right? In like late 2009, 2010. And then you started seeing a market for Bitcoin. People were willing to buy it and trade it, and the price level started increasing. Uh, and that is a phase we're still in now. What I call it is the establishment of Bitcoin becoming a store of value. And I think we're still in that phase. And that phase could last many years, it could last decades, uh, until the point in which Bitcoin is widely recognized as having value by most of the people on Earth. Right now, I would say that the number of people on Earth who recognize Bitcoin as a store of value and that they might consider keeping some of their savings in is probably single-digit percentage of the Earth, population of the Earth. When it's like 20 or 30 or 50% of the people on Earth recognize Bitcoin as something that's worth holding savings in, then I'd say it's a deeply established store of value in the same way that gold is. Like most of the people on Earth recognize gold as something that will hold its value over time. And so it has the perception of being a store of value. Bitcoin, I don't think is there yet, but I think it'll get there eventually. Once that happens, then you can move to the next stage, which is Bitcoin becoming a medium of exchange, and people are using it for commerce and going to the grocery store and saying, "Hey, I want to buy some bread," and the price is available in Bitcoin. Once that happens, and a lot of merchants accept Bitcoin and they start showing prices in terms of Bitcoin, then it's a unit of account. So to answer your question, Anya, I think we're still at the early stage. We're past the collectible stage. I think Bitcoin is a store of value, but I would call it a nascent store of value. It's sort of becoming a real store of value.
Yeah, and with like obviously the price performance last cycle was quite underwhelming and below what most people agreed on. I remember very early in 2024, the general consensus was around the 200,000 mark. I just really remember that figure because yes, there were some very bullish estimates, but most people thought, 170, 180, 2,000. And then we got 126. So do you think that is going to really slow down adoption if we do continue to kind of flatten out and just not get the price swings that we did in the early days?
Yeah, so one of the reasons I think this is happening is that a part of monetization that is something which is an economic good becoming money, like gold going from a rock in the ground to everyone owning gold in the 19th century and using it as money, is the distribution of that economic good into the population. Uh, and what does that mean for Bitcoin? Like the a big chunk of the supply of Bitcoin is still held by people who were there in the early days. Like, the cypherpunks and the whales who came in the early days and bought up big chunks of Bitcoin. And for Bitcoin to become money, those people have to kind of sell. Like, you can't have something that's money where everyone on Earth is treating it as money, but there's like 1,000 people who own 50% of the supply. Like that's not money. Um, and what happened, I think, when Bitcoin got to 100,000, that was a really important psychological level for people who'd been in Bitcoin a really long time. And because of that, a lot of them started dumping a lot of Bitcoin. I mean, this is well reported. There are a number of whales who sold big blocks of Bitcoin. One whale sold, I think, about $9 billion worth of Bitcoin that they had been holding for 15 years, which is incredible, right? They're sitting on an asset that has gone up that much. Just think about how hard that is, by the way, right? Think about most people don't understand what that means. Like, there was some point between 2010 and 2026 when their Bitcoin was worth $50 million, right? Like that's a world-changing amount of money. Your life will change forever if someone gives you $50 million. But they said, no, I'm not going to sell it. Then they
Yeah.
were worth $500 million. No, I'm not going to sell it. They're worth $1 billion, not going to sell it. The ability to hold through that much growth and not actually sell any of it is absolutely extraordinary. But even for some of these people who've gone through like that kind of growth, a lot of them have some number in mind, some psychological level. Like if Bitcoin gets to X, I'm going to sell a big chunk of it. And I think $100,000, well, for whatever reason, humans have these weird, like,
Yeah.
levels at which we associate significance to, right? Whether it's 1,000 or because base 10 is important to us. We have 10 fingers. We think in these psychological price levels. Oh my God, Bitcoin made 1,000. It made 10,000. It made 100,000. I think 100,000 was a very big number. And I think it caused a lot of distribution of supply. That's difficult in one sense because it really slows down the price going up. It would be better for the price in a sense if those people just didn't sell because then the supply coming onto the market is less. But in the long term, it's better because it's a distribution of supply from people who are holding a big chunk of the supply into the wider market. So that means more people now have Bitcoin than had it in the past. And the people who receive the Bitcoin are going to become stronger holders than the person who had Bitcoin that was worth $10 billion. Because there is a lot of psychological pressure when you buy something and it's worth so much and you can change your course of your life, right? You can do a lot of things with $9 billion. So you kind of become a weak hand in a way. Um, But if you sell those Bitcoins to someone who bought them at 100,000, they want to hold it for their own gain, right? They probably don't want to sell it until Bitcoin is like 500,000 or a million. And so they become much stronger hands. Uh, so this is all to say, I think the real reason that Bitcoin stalled out at 126,000, which is kind of disappointing, also there's a silver lining to it that there was a huge amount of distribution of supply from people who were long-term holders, and those people are not going to be able to sell again. You can't sell your Bitcoin twice. They're gone. Uh, and so I think when Bitcoin starts moving again, I think it will move rapidly and it'll move through those price levels that people were expecting in this cycle.
Which Austrian economist who's passed on would you most be excited to tell about Bitcoin and why?
Oh,
I
it's
can't believe you
interesting.
haven't thought of this.
No.
I think
Well,
of this question all the time.
yeah, no, it is an interesting question, and the reason I hesitate is because my mind is going in two directions. One direction is I'd want to speak to Ludwig von Mises, because to me he is the greatest economist of the 20th century, and the chance to tell him about Bitcoin, I think would be amazing, and I think he would understand it, and I think he'd be fascinated by it. But then my mind goes into another direction, which is Murray Rothbard, who was von Mises's student. And the reason I think of Rothbard is because Rothbard, I think, while brilliant, made a lot of mistakes as well. And one of the mistakes he made that I think a lot of early Austrians, it prevented them from understanding Bitcoin, was he made the contention that something can't be money unless it has a commodity use first. And a lot of early Austrians got caught on this and said Bitcoin will never be money. Because what was it? It wasn't used for jewelry, it wasn't used for electronics. It had no commodity use first, so that prevents it. This is the regression theory of money that Murray Rothbard really attached to. And I think I would be really excited to talk to him and say, you're kind of wrong. To not, but to say it kind of respectfully and say, you were brilliant and you understood all of these economic theories of your mentor Mises, but you went a little bit too far. And because he was really thinking of gold, and he was trying to explain why gold was money, and in that he went a step too far and said the thing that's special about gold is it had this original commodity use, and it's just wrong. Um, you don't need a commodity use to get the original value. The original value can just be a whimsy. It can just be someone being curious, or we humans have this weird desire, like whether it's for marbles or baseball cards. Why do we want these things? It's inherent in us, and that's where the original value comes from. It doesn't have to be because it had some utility. I think that's one of the most fascinating things about us as a species is why do we value things just for their own sake because they're kind of cool. It's wired into us, but it
Yeah.
gives us this superpower, right? As a species, that we can coordinate with groups that are much bigger than any other species, much bigger than Neanderthals and Denisovans or any other species, not even human species. And it all comes from this quirk, evolutionary quirk, that that we
Feel
want
seen.
things.
I feel seen. Yesterday, I went to get a coffee and I saw a marble on the ground, and I was like, "Wow, that's so cool!" And I wanted to pick it up, and then I realized maybe some kid lost it, so I'll just leave it where it is. But that compulsion to just get the marble was there.
Yeah, I remember it. I remember it as a kid in like primary school, right? I remember playing marbles and trading marbles and just having this desire for particular kinds of marbles because they felt rare. And companies recognize this, so they tap into that. They try and create these prize programs, or like Pokemon cards are an example of this, where they try and create certain cards which are very, very rare, and that creates these big industries just because humans are wired this way to want things that are rare, and we get some status from it as well. Like there's this status premium to own things that other people think are cool. This is where fashion comes from as well, and art, and I mean it explains a lot of human behavior, which is why I find it so interesting.
Not your keys, not your coins.
If you're holding Bitcoin, your self-custody setup needs to be done right. MindRacks delivers paranoia-grade security so that you can sleep at night knowing that your money is protected. Take control and secure your money the honest way. Head to mindracks.com/honest money. It is, but you're also involved in a real life debate post GFC about inflation versus deflation and what was going to occur. Do you want to tell us about that?
Well, yeah, so, before I knew anything about Bitcoin, like I said, I was interested in Austrian economics. And during the Great Financial Crisis, there was a debate. A lot of Austrian economists predicted that we were going to have mass inflation because the Federal Reserve increased their balance sheet dramatically. It went from, I think, just a few hundred million to hundreds of billions of dollars. And so the Austrians at the time said, look, all this money has been printed, so we're going to get inflation. It's a very simple theory. It's kind of called the money multiplier theory, where inflation comes because the Fed prints money, gives it to the banks lend it out, and then you have more money circulating the economy, and because you have more money, price levels go up. It's a very simple theory. Uh, and I took the other side of the debate and said, no, we are not going to get inflation, because what's happened during the great financial crisis is the banking industry has effectively become insolvent and they can't lend out this money. It doesn't matter that the Fed has printed all these reserves. Uh, it's like, if you print all of these reserves, all this money, and you bury it in the ground, are you going to get inflation? You're not going to get inflation. It's only if the money is circulating. And the money isn't circulating because the banks aren't lending it out. And why are they not lending it out? Is because they had these enormous losses on their books from really irresponsible lending, which came from the business cycle, which is another thing the Austrians explain, right? Where does the business cycle come from? It comes from the Federal Reserve manipulating interest rates and causing people to go into ventures that they wouldn't otherwise go into. At the time, it was, the housing industry, and like creating all these houses and lending to people who really shouldn't have had. They shouldn't have been able to buy a house. They didn't have the cash flow from their employment to be able to pay for the kind of house that they were giving. The banks were giving them money to buy, and that created this huge bubble in housing. And eventually, the bubble burst, and because it burst, it made so the banks were insolvent and didn't have the ability to lend. And because they didn't have the ability to lend, uh, you weren't going to see inflation. That was kind of the main thesis of the article, and it proved to be correct. There was no inflation despite the Federal Reserve creating hundreds of billions of dollars in new reserves. There was no meaningful inflation until like COVID. And when COVID came around, then I said, I think we are going to see inflation now, because the mechanism was very different. The mechanism during COVID was the money did actually start circulating, because the governments around the world started effectively airdropped money into the population. They're just giving people money. And because they were giving people money, there was a lot more cash in people's hands that they started spending. And then across, the Western world, we had very, very high inflation. I'm not sure what it was like in Australia, but we had the highest inflation in the US that we'd seen in like 40 plus years.
Yeah, like I remember post GFC in Australia, it was quite mild. It wasn't as bad as it was in the US. Like we remember, I mean, I wasn't into economics or politics or anything back then, but I just remember we were probably more affected by things that were happening inside Australia, the booms and the bust of the mining industry,
Mm.
not so much what was happening overseas. But yeah, that's just my flawed memory. But I'm really curious to know what it is that you think of the big print theory, and that the Fed will have to now, to manage the government debt, have to do like a bigger than ever print of money. How does that sit against your own framework?
I think that's directionally correct. I think at a certain point, when you have enough debt built up, the only way you can service that debt, there's three different ways. You can grow your way out of it, Like this is the way to think about this is how debt works in your personal life. It's exactly the same thing, right? Imagine you earn like $100,000 a year and you have $100,000 in debt. Like if you have enough money that you can set aside from your job after paying for your rent and paying your taxes and paying for your food, that you can make the interest payments on the debt, you're going to be okay. And it would be useful if you could pay not just the interest, but some of the principal down so you can bring the debt down over time. But if you're earning $100,000 a year and you have $1 million in debt, you're in some deep shit because the interest payments on that debt will start overwhelming your income. You won't have enough income just to pay the interest. And so the debt will start getting bigger just by the fact that you can't pay down the interest. Um, so a couple of ways you can solve this problem just at the individual level. You can become more productive, or you can get like a higher paying job, right? If you're earning $100,000 a year and you have $1 million in debt, if you shift to a job which is $500,000 a year, then you're in a better position. You can service it. So growth, the equivalent at the nation state level is growth. The economy is growing. The country is doing more things that are economically productive. More industries are appearing. Or AI is making things more efficient. All of those things can help you. Another way to get out of the problem is you can default on the debt. You can say, oh my God, our nation is bankrupt. There is no way we'll ever service this debt. And we are just simply going to default and repudiate the debt. And some countries have done this. The problem with doing this is that no one's going to want to lend to you anymore. And so when no one wants to lend to you anymore, interest rates in the country go through the roof. Like you have to pay massive interest rates because no one trusts your nation anymore. And so that in a way constricts economic growth when you have very high interest rates, because if you're a business and you need to borrow to, create your business and in the short term pay your employees, it becomes much more difficult. So defaulting is very painful. Then there's a third option, which most countries eventually turn to, which is inflation, which is this insidious way of defaulting, but not making it obvious. You do print more money, and when you have more money in the economy, it effectively makes it easier to pay down the debt, because the difficulty of the debt is the relative amount of debt to the amount of money in the economy. If there's like a million, $1 million in debt, but there's money flying all over the place and there's tons of money, then it's easy to pay down the debt. Um, so there is a political tendency to want to inflate when you have like a lot of debt. The nation is trying to service a lot of debt, and if you look at the debt levels across most of the world, especially the Western world, these are unprecedented amounts of debt. These are kind of wartime levels of debt. Like nation states sometimes get into a lot of debt because they go to war with another country and they have to borrow to fund uh, just prosecuting the war against another nation. So after World War II, the United States had a very high debt level. But we're in peacetime now. I mean, the US isn't running some world war, but we have debt levels which are comparable to World War II. So that's really, really scary. And it becomes scarier when interest rates go up. Because right now, the United States, the interest on the debt to the US has something like $30 trillion of debt. The interest payments alone on the US debt are about the same amount as the US spends on the Department of Defense, which
Yeah,
which is
I
one of its
heard.
biggest expenditures, right?
I
And
Yep. No,
yeah,
I was
so I was
going
just
to say I heard that. Yeah, I heard that the interest on the debt is higher than the defense budget.
yeah,
Yeah.
and that's at current interest rates. So the scary thing for the US government is, what if interest rates go up? Like, what if they have to pay, instead of paying 5% interest to service this $30 trillion in debt? What if they have to pay 7%? What if they have to pay 10%? The number, if it goes up even a little bit, all of a sudden the nation becomes insolvent, right? Because it's not bringing in enough revenue through taxes to be able to pay for these things. Like, if suddenly, uh, instead of making $1 trillion in interest payments a year, you have to make $2 trillion, something else has to be cut out. right? Or taxes have to go up a lot to get in more revenue. But if taxes go up a lot, then you really hurt economic growth, and then you're destroying the economy of your country. So they're not easy choices here, uh, and that's the danger. And it's very clear that the people who are in power in the U.S. government, in the Treasury, in the Fed, understand we're in a very dangerous point, and they are trying to manage down the interest rate. They recognize there's kind of a panic every time the U.S. interest rate starts creeping up to 5%. There's a panic, and it's like, what do we do? How do we address this? The Treasury Secretary comes out and starts talking about plans for like how the US is going to be more fiscally responsible, and how we're going to pay down our debt, and how we're going to have more growth. Um, they're very aware that we're in a dangerous position. So I think it's correct. Um, the one thing that I think could save us, even though we're in a very precarious position, is growth. There is the potential now to grow ourselves out of this through artificial intelligence. Um, because artificial intelligence is as important and significant as the Industrial Revolution. Maybe it's like even bigger than the Industrial Revolution. It has the potential to increase human productivity enormously. And just by that potential, we could grow our way out of the debt. So I think the default assumption should be yes, there is a potential for a big print, but there is this kind of wild card out there. How important is artificial intelligence? We don't know yet, but we will see over the next 3 to 5 years whether it does have a dramatic impact on global growth and productivity.
Mm. Do you follow Australian economics much these days? You're mostly interested in the US.
I hear bits and pieces just because I have so many family members in Australia. And yeah, I do hear that Australia is becoming kind of more socialist and more kind of confiscatory in its tax policies, and going after people's superannuation and things like that. Um, I've heard a little bit about that, but I also think this is a global trend. It seems like Australia is kind of out in the front of the trend in a way.
Yeah, I think the lever that we're pulling at the moment, because we've just surpassed $1 trillion debt
Mm,
ourselves, we're in the trillions. The lever we're pulling is just taxing more,
hmm.
heavy-handed taxation. So it'll
Yep.
be interesting to see what happens. But um, as a last question, I'm really curious to know, having, there have been so many years that have passed since you wrote the bullish case for Bitcoin. Are you still as bullish? Are you less bullish, and why?
I remain very bullish on Bitcoin. I think the reasons why I was bullish on Bitcoin have not changed. I think it's the best form of money that humans have ever invented. And if you look at the properties that make for a good money and a good store of value, Bitcoin excels across all of the different attributes of money that made gold the best store of value for 5,000 years. Uh, One of the things I like to point out is that information in our world travels at the speed of light, but understanding does not. And I think it takes time for people to understand the value proposition of Bitcoin. And it happens in waves. It happens in these cycles that we've seen where Bitcoin will go up a lot in price, and then it'll crash, and then it'll have this plateau where people become disinterested and the media's not focusing on it, and then we'll go through a new cycle. For some reason, that's what the process of monetization looks like, which is kind of, I think, frustrating for some. It would feel nice if it was very steady and linear, and the price of Bitcoin just went up in a straight line, and that adoption happened in a straight line. Like this, the same number of people adopted Bitcoin every day, but that's just not what happens. But I believe in the fundamental reasons why Bitcoin is valuable and why it has become so valuable. I think they are still true. I think it's just a matter of time before we get much wider adoption of Bitcoin.
Nice. All right. Well, thank you so much for your time. I really, really love this conversation. And yeah,
Thanks for having me, Anya.
still here. You're one of the good ones. We'll be back next week with a brand new episode. If you enjoy how we cut through the noise, consider supporting us directly via the Lightning QR code. Got a question or a thought to share? Comments are wide open. We'd love to hear from you. For bonus content and updates, follow us on socials at Honest Money Show. Until next week, take care of yourself and your money and stay decentralized.